The seniors housing acquisition market has really had a kind of a turmoil of a year in 2009, and there's been some problems, buyers and seller disconnect, financing disconnect, and we're hoping things are going to improve. But to talk about the market, I have here with me Mark Meyers with Marcus and Millichap and Jacob Gehl. These guys have been working as brokers in the industry for many years and have closed many transactions and pretty much have their pulse on the market. So we want to figure out what's going on, what happened last year, and what can we look forward to in 2010. Mark, most of us are pretty glad that 2009 is behind us. It was a tough year in the acquisition market. What was the worst part of it for you?
I think the biggest challenge for Jake and for me was having only a few qualified bidders for each transaction, whereas in the past you might have 8 or 10 or 12 bids on a particular transaction. In this marketplace, for certain acquisition opportunities you might only have 2 or 3 bidders, and at times only one of those bidders was qualified, particularly for turnaround assets or assets that had occupancy problems or cash flow problems. So I think it was just in many cases, the lack of being able to create a competitive bidding war. Certainly for trophy assets, the bidding wars were still there and will be in the future, but it has been somewhat difficult to generate that bidding war with only a few bidders in a deal.
Well, I thought when you had a good deal, one of the problems was there were a lot of buyers for a higher quality one. Wasn't it the financing was a bigger issue?
Well, there certainly was a withdrawal from the capital markets on the part of the lenders. There was also a lot of buyers during the bull run were using other people's money. There were a lot of people that were pushing on cap rates using 1031 exchanges, guys raising funds. So I would say that people were looking to the capital markets for both debt and equity, and I'd say the withdrawal of both of those factors simultaneously made for arguably fewer buyers than people maybe were leading on to. You can't have your acquisitions staff doing nothing, so people were out there looking. I don't know at the end of the day that people were necessarily able to raise both the debt and the equity as easily as they had been able to in the past. And a number of situations we were bringing transactions to the finish line only to find that either the debt or the equity couldn't come through. It was really the buyers that had low leverage and lots of their own equity that were able to really effectively close. But moving people like all the 1031 exchange buyers out had a big negative impact.
Yeah, that business I assume is going to be gone for a while.
I think so.
I would think. Mark, in a perfect world, what is the buyer looking for in today's market? Is the buyer looking for the really good property, the A- property, or is the buyer you're talking to looking for a bargain?
I think it depends on the buyer. Obviously, the institutional buyers are looking for something different than some of the more smaller private companies. Although even in the institutional side, you might bifurcate that between folks that are looking for the higher IRRs, turnaround situations, and those that are looking for the lower IRRs but high quality properties. But I think in general, what buyers want is certainty. So they don't, and that certainty being priced accurately in the transaction. So they don't care so much if a property is a B property, but they just want it to be priced as a B property. And one of the challenges we have had in this marketplace is that there's been a spread between the buyer's expectations and the seller's expectations, and that gap has been difficult to bridge at times.
Well, let me ask about that. That's what everyone refers to as the so-called pricing disconnect. Mm-hmm. Is that, has that, Jake, has that narrowed at all by the end of 2009, or is that still as wide as it was at the beginning of last year?
I think after the collapse of the capital markets in late 2008, there was a perception in the market that there were going to be some tremendous steals out there, and I'd say that prices have come down. I think that buyers' expectations got ahead of what the realities were, and I think that those real steal deals that people were expecting to find, I don't think that they've ever really materialized. I think that people that were not distressed were able to take their assets off the market and off the table. I think that all of the liquidity that the Fed pumped into the debt markets also helped to prevent a lot of distressed lenders from being forced to sell. And I think the combination of relatively high occupancy, relatively stable markets as an asset class, I don't think that those huge distressed sales are out there. We've had so many people call us since the crash looking for that Class A building that's full that they can get at a 14 cap or something like that. And that just never happened. So do I think that the disconnect has finally come to an end? I'd say that buyers are sort of realizing that they're going to need that those great steel deals are probably never going to be there, and that if they want to come into the market, I think they're going to have to. I would also say there's specific opportunities on a one-off individualized basis here and there, especially for transactions that involve litigation or bankruptcy. There's certain isolated opportunities for a real well-priced transaction, but your garden variety normal transaction is really not. You're not going to have as much distress priced into it as the market would like.
For Mark, how about the seller? Has the seller kind of accepted the new cap rate environment?
I don't think that they've had to in many cases due to the fact that, and I know this may be an overused phraseology, but the amend and pretend mentality is there on the part of many lenders and borrowers, in the sense that, and you can't hardly blame them, but if a loan can be amended, paid down to a certain extent, the LTV lowered a bit, lenders are more inclined, at least they have been in the recent past, to extend that loan for another 12 months. We've seen that in the case of Sunrise and some other of the larger players that have been able to hang on, extend their loans in certain situations to not sell properties that otherwise might be sold, and good for them that they're able to hang on and wait for possibly an uptick in the market as opposed to selling at a deep discount, or in lieu of a lender writing down a loan, taking a short sale. So I do think that that sellers have had the capability of not selling properties that otherwise might have been sold because the lenders are working with them. Mm-hmm. And I think part of that's because many of the lenders are under pretty close scrutiny, and I don't think that they can afford to, and certainly don't want to, write down assets to a great extent.
Especially if it's performing. And in the first half of 2009, there was just an absolute drought of deals.
Right.
Second half, it really started to pick up. Jake, what was the change? Was there a change, or was it just a pent-up demand to both buy and sell?
I think that in mid-2009, Armageddon kind of came off the table. I think Mark and I saw most of the transactions that we were working on in 2008 come unwound if they weren't already very far along in their gestation period. And there has been, I agree with you, just a really, everything sort of ground to a halt. And I think people were so terrified. I had read that $4 trillion of money was moved into essentially 0% interest, T-bills, CDs, and that was really people waiting for the possibility of Armageddon. And I think when that was taken off the table, I think that people have begun to dip their toe in to the market, and I do agree that there's a lot of pent-up demand. I think you'll see that continue in 2010. I think you can only earn a 0% return for so long before you start to get bored. And I also think that buying and building senior housing portfolios is something that there's some ego involved, and I think people like to build empires. I think that you can only not buy for so long when you see yourself as an empire builder of a person.